If technology doesn't return to its previous level of leadership, can we reach new heights? As long as technology continues to be a market performer, the remainder of the S&P 500 will find it difficult to make up for any dips in technology. However, what we have observed thus far, including recent days from Nvidia and Tesla, is that technology is genuinely holding its own, while other equities are beginning to exhibit life and triggers. Yes, but what about the trade expansion? Look at the Russell, your huge decision, I mean. Naturally, it hasn't done much at all and is down more than 1% so far this week. I was always hearing, hey, you gotta wait till the Fed cuts, then you go into the Russell. I'm not sure. What are your thoughts? Although there has been some profit taking since the Russell had a strong week last week, I believe this is how bottoms look. Bottoms aren't always straight up, in my opinion. I am aware that energy was at its lowest point and was erratic in 2021, but it eventually reached new highs and had a spectacular increase the following year. Therefore, I believe the Russell will start for a number of years. There is a strong fundamental argument for owning small caps, even though it seems turbulent and we are still close to all-time highs. And you still believe that tiny caps might make a big move since they move quickly, even though you're not necessarily staying with the 50% up. Yes, exactly. Investors should keep in mind, in my opinion, that small cap stocks have been out of style for a while and are notorious for their abnormally strong rises. Over the course of 20 trading days last year, there was a 27% rally. Between now and the end of the year, I believe we may witness something really significant. Perhaps it must happen after Election Day, but I was hoping it would be when the Fed began the easing cycle. However, are small-cap fundamentals becoming more robust? Indeed, merger activity is expected to increase as interest rates decline, and the median price-to-earnings ratio of a Russell 2000 firm is 10.7 times. That's not demanding, really, especially if we're attempting to be valuation sensitive. Oh, well, we'll stop there. As of right now, Nvidia's market capitalization is back above $3 trillion, building on yesterday's gains. Today, there is a 2% move. As we just mentioned, Meta is also higher following its Connect conference. Alphabet, Amazon, and Apple are all unavailable today. Aswath Damodaran, the head of valuations at NYU Stern School of Business, is joining me now to assist in navigating the tech story with earnings in just a few weeks. Thank you for returning. It's good to see you. Hello, Scott. I'm happy to be back. What do you observe today when you examine the Magnificent Seven multiples? I understand that these are the businesses that everyone wants to work for, but over the past few months, we've reminded every one of these businesses of their weaknesses. When it came to Nvidia, the earnings announcement demonstrated how high the bar had been set and how a positive-looking earnings report ended up being a letdown. With Apple, we constantly receive upgrades. There are currently 16, and none of them live up to the hype. The ideal momentum player in either direction is Nvidia. I can understand why Nvidia would be your first choice if you were a trader, but as an investor, I believe Nvidia offers the lowest chances. But I want to talk about it as an investment because 34 times, it's less expensive than it has been. Second, Jensen Huang has informed us about the high demand the company continues to experience, speaking as recently as the past several weeks. Similar to how we discuss Apple, they have what many would argue is not just a first-mover advantage, but also a moat due to their installed base. But what role does all of that play? I'll give up on all those points. It's a fantastic business that is targeting a large market that it will control due to its enormous moats. Reverse engineering from the $3 trillion market valuation, however, would require $1 trillion in sales and 70% margins to be delivered in 10 years. Therefore, I still struggle to reach $3 trillion even if you take everything Jensen Huang says as fact and include it in. According to the company's present financials, it must see tremendous growth and sustain operating margins of 70% in order to deliver on the sum you have already paid. The reason the odds are against you when it comes to investing is that you have priced this business to be the greatest business ever. What's left to gain if the company is simply fantastic instead of the best? That is disheartening. Expectations will, in my opinion, fluctuate in this situation, but eventually they must be adjusted in order for the business to truly meet those targets. Have you ever sold any of your own stock? I sold half, just as I had done a year prior. I may eventually be due for another half to be sold, but the last time I valued it was immediately following the earnings announcement. Thus, it appeared to be the least overpriced since the AI boom began. When it hit $136 3 or 4 months ago, that would have been the best time for me to sell. Therefore, I'm keeping an eye on the price. If it causes an excessive increase in value, it might be time to sell the remaining half. Therefore, I'm willing to do it. Well, that's fascinating. Semifinals. I believe the SOXX was up about 1.3%. Nvidia had a strong day. Micron results start to appear shortly after the close. Mike, how do you interpret the idea that we care one day and then kind of don't the next? For the segment of the market that was the engine for a large portion of the year, yes, indeed. In my opinion, the market has essentially determined that we are satisfied with current levels, which may sound deterministic. Since there isn't aggressive selling at S&P 5700 yet, a few semi-stocks that appear to be oversold may be seen on any given day if the macro cooperates. This headline, or perhaps no title at all, indicates that Jensen Huang may postpone or halt his stock sale plan for the time being. That shouldn't really matter because it wasn't a major component in determining the value of the Nvidia stock that was up for grabs, but it was still a valid reason for it to work. It's much more about whether the Magnificent Seven or banks and small caps are operating on a particular day, in my opinion. While the remainder simply depends on the sentiment surrounding the long-term secular growth story, banks and small caps are actually depending on a gentle landing and rate cuts from the Fed. Today is interesting since Nvidia and the associated companies are once again holding up the market. Mike, I'm not sure what day of the week it is, but I do know that Nvidia has been holding up the market for the past 2 years or so. I'll tell you this. Nvidia's flat has been there since the end of the second quarter on June 30. Since the equal-weighted S&P is up 8%, the rest of the market has finally caught up and expanded, as everyone had been urging. You might be wondering if Nvidia is finally receiving some relief from this. Around these same levels, in the mid-120s, it is somewhat churned. We'll see, but that chart there might finally break this trend of having somewhat lower peaks. Since the majority of equities are down today, I believe that's what the market is holding on to in an attempt to prevent a larger decline.